Hi, everyone. I'm Rachel Wolfson, the host and founder of Web3 Deep Dive Podcast. Web3 Deep Dive Podcast focuses on real-world Web3 use cases to help you better understand how Web3 is being applied today and how it may be leveraged in the future. If this sounds interesting, I encourage you to subscribe, like, and share the content that you're seeing today to help spread the word about Web3. Welcome back to another episode of Web3 Deep Dive Podcast. I'm so excited to be recording today at the North American Blockchain Summit in Fort Worth, and today I'm speaking with a very special guest who needs no introduction, but I'll briefly introduce her, Caitlin Long. Actually, Caitlin, I'm going to have you introduce yourself because you have many titles.
Oh my gosh.
So
thank you, Rachel. Just a Wyoming girl who fell in love with Bitcoin in 2012 and is the founder and CEO of Custodia Bank.
Right. Wonderful. So, Caitlin, what do you think of the North American Blockchain Summit?
Oh, this has been surprisingly great for a state conference. I was thinking today with all the activity in the energy industry in Texas and all the energy people around here, wow, Texas has really broken through. And it's not a surprise. Obviously, the energy cost being so low here is what attracted so much of the mining industry to come here. But I lament that we don't have this in Wyoming because our energy cost is unfortunately not low enough to be able to bring this kind of activity into the state of Wyoming. But hats off to Texas.
Yeah, I mean, but there's still, we were just chatting about the facility in Gillette. There's still a ton of mining in Wyoming.
Correct.
That's happening.
Yeah, I mean, for Wyoming, I'll bet you that the Bitcoin industry and blockchain industry more broadly has had a bigger impact per capita because Wyoming is such a small state by population.
Right.
But in Texas, boy, you really, when you can get the energy heavy hitters that have been together at this event, hats off to Lee and the Texas Blockchain Coalition, it's pretty amazing. And I did not understand fully. I mean, I'm on the board of Cipher Mining, so I understand Bitcoin mining's impact on Texas because Cipher has a big facility in Texas, actually a couple of them. But and I've been talking about how there'd be vertical integration of the Bitcoin miners into the power producers. Mm-hmm. What I didn't fully understand is the Bitcoin miners' integration into just the gas wells themselves. And I keep hearing the phrase vertical integration. It's the gas companies and looking at, okay, if gas is at $9, I'm going to send that gas through the pipeline, but if it's at $2, I'm going to be mining Bitcoin with it right there instead, right? So there's some optimization that can be done within the energy industry. It's not just within the power producers themselves. It's where the power itself is actually produced. The producer can figure out, am I better off mining Bitcoin today, or this minute rather, versus sending the gas that I pull out of the ground into the pipeline. I had never thought of that, had never heard it, and guess what? It's happening.
Yeah, I mean, this is all new to me.
Yeah.
I mean, I'm trying to actually digest and process everything you just said, but I had no idea about that.
This is having a huge impact on the energy industry, and it's just getting started. And of course, Texas would be the place where it's happening. But obviously, Texas has a number of advantages. It's got the metropolitan areas, but in terms of the energy industry, big, deep energy industry that is very business oriented, very business friendly. And then also on top of that, just the laws that it has and the tax friendly nature, and just here come the Bitcoin miners, and they've been recruited into Texas and not turned away like they've been in states like New York.
Right, yeah. I mean, those are all great points, which we should touch on in a little bit, but I also want to talk to you about Wyoming and Custodia.
Woo-hoo!
So let's start from the beginning because I want to catch my audience up in case they haven't been following the story. Yeah. So explain to us what Custodia is and why you founded it.
We're a bank and we're live and we're a Bitcoin custodian. So US dollar services and Bitcoin custody. I have to give the disclaimer, we're not FDIC insured. And check to see whether we're licensed in your state to do business because we're not in every state quite yet, but that's changing almost every day.
Are you licensed in Texas?
We are for certain products in Texas.
Okay, got it.
Only for certain products though.
Okay.
So.
Now, when did you establish Custodia?
The business got started in 2020, but we went live last summer for US dollar services as a bank and then for Bitcoin custody in October.
Okay. So there have been challenges. I mean, you're setting up a...
The Fed tried to kill us? I guess you can call that a challenge.
Right, yeah, that's pretty challenging. And I like how you're just so open about that because, I mean, you know, it's been challenging. And I've been reading about that and even writing about it a little bit.
Yes, you have, yeah.
How have you overcome those challenges? Or, you know, just talk about it, I guess.
You know, I was thinking about this the other day. When you're a change agent, which I've done my whole career, it's never a straight line. And I didn't anticipate that it would be as difficult as it was. Nobody did, right? But nobody anticipated FTX either. And obviously that made everything more challenging for our industry. So what happens when you start on gnarly projects like this, which is what I've done before. This is my 5th startup. And none of them have been, it never works out the way that you planned it. And every single one of them have had challenges that came up, but we always got to the end goal. I'm like a dog with a bone. And sure, this ended up in litigation, but I'm still confident we're going to get there.
So why did you want to start and create a bank in Wyoming that does crypto and U.S. dollars?
Well, it's because of something that we're all talking about a lot, which is Operation Choke Point 2.0, that the industry had been debanked. We heard this with the state of Wyoming in 2017 and 2018. We had entrepreneurs who were coming to testify that they were losing their businesses because their banks were debanking them. And that was the first wave of Operation Choke Point, and the second wave, of course, is happening right now. Mm-hmm. And it's hitting our industry in a very big way, and it's especially hitting the mining industry. So what's one of the things that's interesting about banking the mining industry is the miners have unique needs because they need somebody who can get the U.S. dollar and Bitcoin custody piece connected. And that's something that just doesn't exist in the market right now. So we're spending a lot of time with the miners trying to help them solve the financial and it's really the corporate treasury needs that they have. The miners obviously produce Bitcoin, but their cost base is U.S. dollar. So they're running what is effectively a giant foreign exchange operation. And they need to be able to liquidate Bitcoin to pay their expenses into dollars and do that on an optimized basis. And we're starting to see a lot more corporate treasury sophistication coming into the mining industry as well. The biggest miners now have trading desks. They're integrated in. Some of the miners that have power contracts with ERCOT are actually in a power optimization strategy where they can within a minute shut off their mines and sell power if it's more profitable to sell power back to the grid. But it's the interruptible load that they all love. So we're spending a lot of time with the companies that are doing that. They need a bank that's as sophisticated as they are that is not going to abandon Bitcoin.
Right. I wonder what they were doing before Custodia. I guess they were with traditional banks that maybe abandoned them.
Well, Silvergate and Signature, a lot of them, sure. I mean, that's the reality is Silvergate and Signature pretty much banked everybody in this industry. And then you certainly had, the biggest players were able to bank with the largest banks, but you also had a number of smaller banks that were sort of, just experimenting with this industry. And those are the ones that have been hit the hardest by Operation Choke Point 2.0. We're recording this on Friday of the conference day, and just today there was a big enforcement action announced against a bank in Oklahoma that was one of the first banks to offer Bitcoin custody. They partnered, I believe, with Coinbase, and their bank regulator just went after them on a consent order for being too risky and is really focused on that activity as the reason for the consent order. I think it's all part of Operation Choke Point 2.0, and it's, we just need somebody who's going to create durable banking services. When I say we're not FDIC insured, some folks will naturally say, well, oh no, you're not. Well, most Bitcoiners will say, oh great, you're not, right? Because they understand that Operation Choke Point was the brainchild of the FDIC chairman under the Obama administration, and he's back as chairman of the FDIC under the Biden administration. And he's certainly been in the news in the last couple of days. Mm-hmm. The FDIC has got scandals that have been all over the Wall Street Journal this week. But in any event, he's the architect of Operation Choke Point, and so there's no love lost between him and companies in this industry who have had their banks close their bank accounts.
Right. So maybe in a way it might be beneficial. I don't know if beneficial is the right word. That it's not, that Custodia is not FDIC.
They don't have jurisdiction over us.
Yeah.
Yep.
Right.
Yep.
So I was like, I don't know if beneficial, but maybe beneficial is right. There are benefits there, I suppose.
Yeah. Well, and it's interesting. I keep hearing more and more news about what's going on with the stablecoin bill in Washington, and the probability, I understand, just increased that something happens. It's not now going to be part of the year-end omnibus bill. If it happens, it would be part of the appropriation bill in February. But long story short, there's a lot happening that the federal government is finally going to have to get a policy in place. They've been dragged kicking and screaming into this, but just this past week, the Bank of England put out a stablecoin report saying all UK pound sterling stablecoin issuers have to be banks that hold their reserves one for one at the central bank. That is our business model that we proposed to the Fed for Custodia's stablecoin-like instrument, AVIT, and it was deemed unsafe and unsound.
Interesting.
And that's the very business model that the Bank of England is now saying they're requiring. Well, it's obvious why it should be required,
right.
Because you shouldn't have leverage banks issuing stablecoins that could be withdrawn in the span of minutes from the bank. I mean, you literally can have a bank run within the span of minutes, and if you can have a bank run within the span of minutes, that bank has no business making loans that are long-term, and as a result of that, it doesn't need FDIC insurance. Mm-hmm. So it's a feature, not a bug, that the FDIC declined to insure us.
Yeah, interesting.
Mm-hmm.
This was the question I wanted to ask you. I just remembered. So Custodia is in Wyoming.
Yes.
We're in the United States, and
Yep.
Innovation is happening here. Do you think that the United States is still is leading the way, or a leader in terms of innovation with crypto, or do you still see Europe as maybe a little bit ahead of us? Like, what are your thoughts on that?
Well, the regulations are clearer in Europe and Japan, no question. But the U.S. is still where most of the ideas are coming from, where a lot of the innovations are coming from.
So, are you confident and happy that your Custodia is operating in Wyoming? I feel like you're going to kind of lead the way for maybe other banks offering similar services to eventually maybe be set up in the United States.
Yeah, absolutely. But everybody's going to look at the consent order that came out today for the bank in Oklahoma and say, oh, I don't want to incur the wrath of my regulators, right? This is Operation Choke Point 2.0. It's the subtle pressures that the regulators are putting on the banks not to do business with this industry. This one was not so subtle. It was a public consent order that was released today. But otherwise, it's definitely, a lot of banks won't want to do it. But I will say a lot of banks are also curious, I've gotten so many messages from bankers, CEOs of small banks saying somebody needed to do this. Somebody needed to stand up and fight. And look, I mean, they forced us into this position. I've said so many times, we weren't looking for this fight, but we weren't afraid to have it when they brought it to us, and here we are.
Yeah, I mean, it's wonderful to see that you did fight back and stand your ground. It's like kind of what Ripple was doing when the SEC went after them, and what Binance is doing, because we need these companies and the people with the time, the money, and the knowledge to fight back in order for regulation to actually, regulations to become clearer and innovation to continue in the United States.
Well, there are so many examples where federal regulators are overreaching their boundaries, and that is absolutely happening with the SEC, right? You mentioned the Ripple case, and I think the Coinbase case may very well, have a similar outcome. It's the same Judge Torres in the Southern District of New York. It's going to be very interesting, right? Because in some ways, I analogize what Coinbase is up against with the SEC to what we were up against with the Fed. Coinbase has obviously been around a lot longer, and it's a much bigger company, more successful than we are. We're early stage. But Coinbase has been the good player that was literally begging, all right? You never saw them say, we don't want to get regulated. They were saying, we really want to try to figure this out with you. Let's not have a dispute. And holy cow, the SEC let their registration statement go effective. And then a few years later turns around and says all these things that we're trading on this registration statement that we allowed to go effective at the IPO oh, those things were not legal? What? Like, that just doesn't make any sense, right? And in our fight with the Fed over, but it is in then sort of an analogous way, we were the ones that got the closest, and we were the ones that were actively trying to work hard to figure out what's the pathway for this industry to get banked and do it in the right way.
Right.
And both of us both of us ended up getting lambasted by our regulators and in court, and here we are. But we're both the ones that are fighting those two respective.
Right. Well, that's what I was saying. Custodia will be leading the way. I mean, yes, the incident in Oklahoma that you mentioned, which I'm going to look more into, but Custodia is going to lead the way because these small winnings are actually larger winnings for the entire industry.
Correct.
And we need people like you to fight for that, because if you don't fight, then they win, right?
Yeah.
And then there's
because nobody. It's so interesting because the federal regulators. There's a law review article called "The Corporatist Origins of Bank Regulation" by David Zaring of Wharton, and he's absolutely right. He said one of the problems with federal bank regulators is nobody ever sues them. And they're not part of the appropriations process because their budgets are paid by fees, and so they really don't have any oversight. And when you have an agency that has no oversight, what do you think happens with the agency, right? And there's no check and balances. That's part of the problem. Right. So long story short, we're sort of, unfortunately, we were thrust into this position where we were left with no choice. But I do want to say, a lot of folks have the perception that the Fed killed us. The Fed did not kill us. Yeah. The Fed wounded us very much, but we are absolutely operating. We do have an interesting business, albeit with one hand tied behind our back, with a much harder road. But we do have the ability to operate, and we're going to keep going. And the industry, I can't tell you how many people have come forward to say, look, we really want to help you. We want to do business with you. And that's, a lot of people have asked us over the years, what can we do to help you? I now have a response. If you're eligible to do business with us and we're licensed in your state and you clear our onboarding, please do business with us.
Yeah, wonderful. I'm excited. Any final thoughts that you want to add? Anything that you want our listeners to know about, or just goals for Custodia moving forward? I mean, you kind of mentioned what you hope to see, but...
Yeah, I mean, just for Custodia specifically, we're going to be, our next products on our roadmap are our API. We've gotten US dollar services out, a money market fund, as well as Bitcoin custody. Those are the building blocks. And now then we need to build out the API so that we can bring the more tech forward customers, and that's next on our roadmap. We'll have that out probably by spring. And then we will bring prime services into the platform as well, just connecting into the exchanges. A lot of people don't, especially in this space, don't understand how unusual it is that market makers, exchanges, and custodians are all the same entities in this space. It's part of the problem. And I truly believe that especially custodians should be segregated. They should not be market makers. They should not be exchanges. You should keep that separate so you don't have shenanigans like FTX end up happening. And so, long story short, that's what we are. We are a segregated custodian, but we will, just like in the securities industry, be plugged into the venues like the New York Stock Exchange and NASDAQ is plugged into the securities custodians. We're going to do exactly the same thing. We will have exchanges coming onto our platform, but we need to build those integrations and get those relationships up and running. So those are the things that are next for us. All that's happening right into the halving. So maybe this is a good place to end. The halving is coming in April. Yeah. And you and I both know, because we've been around a while in this space, that typically tends to usher in bull markets. Is Bitcoin ahead of itself right now? I don't really care because I don't make price predictions. Right. But it does. I love the fact that Bitcoin, that there was an attempt to try to kill it in Washington, D.C. by debanking it and by all these regulatory actions, and they didn't kill it. So now the regulators are going to have to figure out how to deal with it. And so, and it's going to be happening right into a halving, which is going to, if past is prologue, the bull market will be in the fall to end of next year, right when the presidential election is happening. It's going to be delicious. Yeah. It's just going to be so wonderful to watch that. Right. Yeah. There's a lot happening, and I'm excited for the future of the United States. I mean, talking to people like you, talking to RFK Jr. yesterday. Oh, great. You got a chance to talk to him? Yeah. Amazing. Yeah. So I'm feeling so hopeful, and I remember feeling so hopeless a few months ago about the United States, and now I'm feeling differently after talking to you and
RFK Jr.
Well, and some of the court cases have been going the industry's way. I mean, I didn't expect the Ripple court case to go the way that it did. And I do have to say, John Deaton has done the industry a large, and I just finished reading his book. Highly recommend it. What a story.
What's the book called?
It's called Food Stamp Warrior.
Okay.
It's a personal, it's not a biography, but it explains how he got into crypto law, and I hadn't fully understood exactly what he did, bringing 75,000 people who volunteered to become defendants in a lawsuit against the U.S. government. I mean, they literally became defendants. He intervened they all became sued by the U.S. government voluntarily over XRP, and boy, in that decision, it was a clean win. XRP acquired in the secondary market was deemed not a security. I know there are some securities lawyers who are poo-pooing Judge Torres's decision. I don't agree. I think that was a very sophisticated decision. There's no contractual privity between the issuer once something's been issued and the purchaser.
Right.
And John got a clean win, and he's a real fighter too. And I got a chance to meet him at Consensus.
Wow.
And I didn't fully understand the backstory, but after having read his book, there are folks like us around who are taking the stand, and having those positive court case decisions against the overreach of the executive agencies is also a reason for optimism.
Definitely. Yeah. Well, that's a great note to end on. Optimistic, and the U.S. is going to drive innovation.
I hope so, and it's because, as Nick Carter says, the courts have been the last bastion of freedom against the executive branch overreach in this country, because Congress is hopelessly deadlocked. So, we've definitely got a few more court cases that this industry is working its way through, including ours. So keep your eyes on it, and let's hope that we continue to have wins as an industry.
Yeah, we will. Thank you,
Thank
Caitlin.
you.
Thanks. Special thanks to Aaron Bender for producing Web3 Deep Dive podcast. I'd also like to thank the sponsors behind Web3 Deep Dive. Finally, thanks to the listeners for tuning in. Please be sure to subscribe, like, and share. I'll see you guys next time.